I made $32,000 in March, and here's the twist. I only did it in 3 trades. This isn't one of those every trade was a win, only highlights, cherry picking videos. This is a fully transparent, thorough, deep dive, in-depth trading breakdown. If you've ever wondered how professional traders pull profits like this is the video for you. I'm breaking down every single trade that I took in the month of March. Entries, exits, the size, margin, and even one setup that I passed up on. We'll also be going over what the stats mean. What is profit factor? What is win percentage? How is it calculated? What is risk to reward? Why is it important to your trading and your stats? This is not your average trading recap. This is a play-by-play blueprint for serious traders. Let's get into it. If you're new here, hi, welcome. My name is Victoria Duke. I go by Tori Trades, and I've been trading the markets for 10 years now. Some of my craziest trading years involved turning a $20K account into $100,000 in 2023, and then following the next year turning a $100,000 account into $300,000. This year, I'm working on making $500,000 in trading profits. We're going to start with some stats here. For the month of March, we're looking at 3 total trades, a profit of $32,020, a profit factor of 5.03, a trade win percentage of 66.67, an average win to loss of 2.51. And then lastly, my TradeZella score, 81. Speaking of which, TradeZella is this program that allows me to track all of this data, to track all of these stats. I haven't used a trading journal for all of my trading career, but when I tell you when I started to implement a trading journal and to analyze and be presented with information that shows me this is working and this is not, my trading has completely transformed. If you go way far back into my content, you'll never see me speaking about a 3 touchpoint trendline break or a 2 touchpoint trendline break or a playbook or any of that. And this platform allows me to create these playbooks or these scenarios or these setups or these rules and to calculate and be presented with, oh, these are working. All of these playbooks that you've implemented are working. These ones aren't working as well. And then you start to slowly make the transition into cutting out the trades that don't work or the playbooks that don't work for you and start doubling down on the ones that do. So when I started implementing a trading journal, my trading transformed. You can see I'm very passionate about journaling your trading because it's just, one, I nerd out with stats. I love to see the stats. I'm competitive. I love to see how my stats compares to others. If you're interested in signing up for this trading journal, you can purchase the yearly subscription and you can get 20% off of that if you enter code TORI20. Or if you're just looking to experiment with the program, try it out for the first time, maybe do a few months, you can enter code TORI10 for 10% off the monthly. Now, if we change it to the percentage, you can see that I made 21.70% in March. This is 3 trades. And the coolest part about this is I wasn't clicking buttons and aimlessly placing a bunch of trades out of the month. I was patient and waited for the right setups and only had to do 3 trades in the month. So I was rewarded for being patient in the market. So now before we do any sort of deep dive into what is profit factor, what is the win percentage, how is it calculated, how does it help your trading, where does it become relevant or irrelevant, I want to show you guys my broker statements to showcase that all of these stats are real, they're verified, and let's look it up. Here we go. All right, this is my downloaded TradeStation statement for the month of March. You can see here, we're looking at March 31st, 2025. Okay, and now let's go down to the activity for this month. So you can see the 3 trades here. Now you'll see some other stuff as far as fees, commissions, but what we're looking at is the profit and loss. So these are gonna be the 3 trades here. So we're looking at the first trade of the month was a $7,900 loss. Second trade of the month was a $34,755 win. And then the last trade of the month was a small $5,270 win. So you can see the beginning balance was $350,000 and we ended the month with $382,000. And the monthly activity was $31,908. Here are the commissions. So there's going to be a slight discrepancy between the total month profit and loss here at $31,908 versus the one here in TradeZella. We're looking at $32,000. So just plus or minus some commissions that weren't added here into TradeZella. But this right here is my TradeStation monthly statement. So if you guys looked at any of the trade breakdowns that I posted previously this month, we had to go through the daily statement, which is a little bit more confusing. There's a lot more information on there. This is the full month of March broker statement here. Okay, now let's get into some of the nitty gritty. If you are interested in making the transition from Forex to futures. Or maybe you are one of those traders that got into trading through some sort of pyramid scheme and you got suckered into depositing money into an offshore brokerage. Let me introduce you to something that is regulated, that is safe. This is TradeStation. TradeStation is a U.S. equities and futures brokerage in the U.S. And it's what I've been trading since the very beginning of my trading career. And even my mentor has been trading on TradeStation for 30 years now. It is a trusted brokerage. Highly recommend it. If you're interested in signing up, go to tradestation.com/Tori. They're doing a promotion right now where you can deposit X amount. Now I say X because it's different amounts. So if you deposit 200 versus 100 versus 1,000 versus 5,000, they'll give you cash back into your account to trade with. So before we get into the trade breakdowns for each trade of the month, I want to talk about something that most traders ignore or misunderstand completely, and it's their stats. All right, so let's start with the win percentage or the win rate. This reflects the percentage of your winning trades out of the total trades taken. So win rate is exactly what it sounds like. It is how many of your trades end in profit. So since I have a win rate of 66.67%, that means that 2 out of 3 of my trades were winners. But now here's the truth. A high win percentage does not always mean that you're profitable. Weird, right? You can have a win percentage of 80% of your trades and still lose money. This is if your losers are bigger than your winners. This is where win percentage doesn't necessarily determine your profitability. This is just out of how many trades you take, how many are winners and how many are losers. So based on my month, we're only looking at a 66.67% win. And in accordance to the public school system, that would be a D. So I wouldn't be doing very well. But if you look at the net profit and loss, we're looking at $32,000. That'd be an A+ in my book for the month, especially for 3 trades. So we just have to understand when trade win percentage is relevant and when it's not. Now let's talk about risk to reward, or your RR or your R multiple. This is the foundation of how you plan your trades. If I risk $1,000 to make $3,000, that means I have a 1 to 3 risk to reward. So now I'm going to go into TradeZella, go back to this filter here, and now we're going to filter by R multiple. Okay, so now this is my R multiple for the month of March. We're looking at a 2.29 R multiple. All right, next you guys can see profit factor on the screen here. The total profits divided by the total losses. A profit factor above 1, anything above 1 indicates that this is a profitable trading system. My stats here for the month of March, we're looking at a 5.03 profit factor. This is a pretty powerful metric. So this essentially tells you how many dollars you make for every dollar that you've lost. So mine for the month of March is 5.03. So that means for every $1 that I lost, I made $5.03 back. So we are dialed in. We're dialed in for the month of March. So these are essentially the stats that I care about the most. And knowing which one is more relevant or which one holds more weight, profit factor indicates that you are trading a profitable system. The win percentage is purely just showing you how many winners you have, but it won't matter unless your risk to reward is set accordingly. If you're taking on way more risk and you're losing more than you are on your winning trades, the win percentage means nothing. So this is just something to understand how these stats come into play when you are trying to develop a profitable system and how I use them. Now let's get into the actual trades. So at the beginning of this video, I talked about how I was able to come out on top, only 3 trades, $32,000. And on top of that, we started the month with a loss. The very first trade of the month was a almost $8,000 loss. I want to do a quick overview of this one since I did already do a full trade breakdown on it before, but this was a beautiful trade. This was a by the book, A+ setup. This is an instance where you follow your plan by the book to a T, and even when you're presented with market conditions that don't work in your favor, you have proper risk management to where you were able to mitigate and properly manage this risk. So it was a loss, but beautifully mitigated and beautifully executed. So in this loss here, we are looking at the playbook. This is a 3 or more touchpoint trendline break. We were presented with a 3 touchpoint trendline break. I took a long position here. Price moved sideways through it. I took my loss here at $7,920, actually $7,954, and then price ended up consolidating after. So this was an instance where I took a loss, but this was a 5-star trade rating. Even though it was not a win, it was beautifully executed, and this is just a type of trade that you have to be, as a trader, completely prepared for. There are going to be so many instances where the stars align. You are presented with an A+ setup, and it still doesn't work out. So as long long as you can be mentally prepared for that every single time you enter a trade, you're headed in the right direction. Now let's go over some more specifics on this exact trade. This is platinum. I traded 20 contracts. How much does 20 contracts cost? We're looking at around $66,000 to hold this position. This is something that I continue to talk about, and if you missed it in any of my previous videos, I will continue to educate you and enlighten you that when I place this trade, I am never willing to risk the amount that it took to hold the position. When I got into platinum and purchased 20 contracts for $66,000, I was not willing to lose the $66,000 in this trade. So you always think of it like you are purchasing a watch or some designer bag or a car, but you still have the tangible item. I still have my 20 contracts. It's only dependent on what the market does after you've made your purchase that will either result in a profit or result in a loss. So in this instance, I purchased my 20 contracts for $66,000. Price moved against me, or the market went down. The value of my contracts or the value of my car or my watch went down. So I lost $7,954, but then the rest I was able to get back, went right back into my account. So think of it like, since this is a long position, this is the easiest way to think of it. I purchased a car for $66,000. Turns out wasn't very valuable, and I put a lot of miles on it, and I'm actually ready to sell it. I go to the dealer and they tell me that, all right, I know you paid $66,000 for this car, but since you drove this many miles on it, we're taking off almost $8,000. So I have to take a hit when I'm ready to sell that car. So these 20 contracts that I purchased just went down in value $8,000. So then when I went to go sell the 20 contracts, all that I lost was the $7,000, almost $8,000. So then the remaining balance I got back into my account. And another thing that I want to talk about, since we're talking about the contract size or the amount that it cost me to hold this position. So here you see the adjusted cost of this trade is $975,000. That is not how much I'm trading with. You guys saw in my account, I started the month with around, I think it was $330,000. I am trading on a margin account. So this essentially allows me to borrow money or leverage my account through my brokerage. So within futures, and we'll go to the TradeStation website really quick so that you guys can get a better understanding of this specific instrument and what the margin percentages are, what the initial requirements are per contract. So let's kind of get into really some of the nitty-gritty here and understand what margin is specifically through TradeStation here. Okay, here is the futures margin rates for TradeStation. We're gonna go down here to these filters and we're gonna look for metals since I'm trading platinum. All right, it's gonna take us to all the metals here, and we are looking at platinum right over here. Boom, 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 boom. Okay, so like I mentioned before, margin trading essentially controls larger positions with relatively small amounts of capital. I am borrowing funds essentially from my brokerage account. In futures trading specifically, it involves posting an initial margin. So it is a fraction of the contract's total value as collateral to open the position. So they want to know that you're good for it. You're good for this borrow that you're about to get, or you're good for this leverage that they're about to give you. And essentially this leverage will amplify your gains. But now obviously there's a downside to it as well, so it will also amplify your losses. So it is incredibly crucial to make sure that you are properly mitigating your risk, especially when trading on margin or with leverage. Now for platinum specifically, TradeStation requires an initial margin per contract. So remember, I'm trading 20 contracts. And this is also subject to change based on market conditions. But essentially, as of now, TradeStation requires about $3,300 in initial margin per platinum futures contract. That's how much each contract costs. When I took 20 contracts of platinum, that means that the total margin used was $66,000. So if we are looking down here at platinum and we understand that the cost per contract for platinum is $3,300, that means that since I traded 20 contracts in March, the total margin used was $66,000. Like I'd mentioned before, when holding 20 contracts, you don't lose the $66,000, or you're not willing to risk the $66,000. So that means that I was able to control 20 full-size contracts of platinum without having $1 million in my account. I only needed $66,000 allocated in margin to open that position. Margin increases your upside and your downside, but it also allows you to make money faster. So if it goes against you, you also stack the losses faster. Understand that completely before trading on margin. That's why I always say, don't I always say it, Peyton? Always. That margin is a tool, not a strategy. Now, something to consider as well. This is going to be different per brokerage. So this is specific to TradeStation, but there is also initial margin here. If you're holding a position overnight, if you're shorting a position, if you're longing a position, there are different kinds of margin required. If you're just trading within the day, there's only $1,650 worth of margin required. If you are trying to long overnight, it's $3,300. So understanding that there are different types of margin requirement for different types of trading within this brokerage account. These numbers will vary depending on brokerage, depending on instrument, and depending on what kind of position you're taking. Overnight, over the weekend, a long position, a short position, intraday. So I hope that was helpful. This is exactly what I'm using to trade my positions. Margin accounts, platinum specifically, 20 contracts. And then before we move on to the next trade, I want to show you guys the execution, which I really wish we could figure out a different name for that. Maybe just the trade. So you'll see here on March 4th, I entered at 975.55. Price went against me down to 967.63. And I closed my position on the 6th for a loss of almost $8,000. You guys can see on the chart here, the arrows will show exactly where I got in, exactly where I got out. Okay, now let's move on to the next trade of the month. This was a very fun trade here. So where do we start with this trade? We'll start with the contract size yet again. So I am continuing to trade 20 contracts. Every time you see me in a position, specifically in platinum, I will be trading the same amount of contracts. Now, I was in a position earlier in my trading career to trade with a smaller position size. And the reason this would be so dynamic is when I'm presented with different types of setups in the market, whether it's a high risk setup or a low risk setup, I can adjust my position size accordingly. This year specifically, I have been consistent in my 20 contracts, even if I was presented with a high risk setup, which I was in this specific scenario. In my earlier days of my trading, I was able to adjust and modify my position size or my contract size. So if I was presented with a high risk setup, I would just simply do half the amount of contracts. So since I now have 10 years of trading experience and I am trading with a bigger capital size, I am comfortable with continuing to be consistent in my 20 contracts, even if I'm presented with a high risk setup. But for the beginner traders, for the newbies, for those that are trying to find consistency still or learning a new strategy or a new system, always make sure to adjust your position size accordingly. So we'll start with the entry here. We were presented with a more than 3 touch point trendline break. This is my playbook, the 3+ touch point trendline break. That is my bread and butter. That is my A+ setup here. We got a break of a downward trend line. I took a long position. We were in the money about 25,000, came right back to break even, went back up to 25,000 plus some, got to an area of resistance here, and I closed for a profit of $34,721. In some of my trade breakdowns, I forget to mention it because I'm just so used to it, and I forget that a lot of you guys might be new here, or that you might be new here, and I forget to talk about my time frame. What time frame am I trading? I trade the 4-hour time frame. You can see right up here. That means that I am trading on a higher time frame. I am holding my positions for days on end, sometimes weeks. And when price makes a move and crosses these trend lines on my higher time frames, it holds so much more weight. It is much more of a significant move than it would be on the lower time frames. So since I am trading the 4-hour time frame and slowly, ever so slowly, starting to incorporate the daily as well, that makes me a swing trader. Now, when taking my positions, when entering in on my positions, a lot of questions that I get asked is, do I use multiple time frame analysis for my entries? Do I go lower in time frames for a sooner entry? And the answer is no. So the only thing that I will do is incorporate higher time frame entries. But if you have any questions on the top-down analysis that I do when entering my trades, I did a full trendline trading masterclass breakdown in this video. It's under 17 minutes. If you haven't seen it, check it out now. It gives you an idea of how I draw these lines, what my top-down analysis looks like, and how I move from time frame to time frame. But one thing that I will say is I do not ever go to a lower time frame to look for a sooner entry. I will start at a higher time frame just to get an overall view of the market direction, overall view of the market trend, and then work my way down from the monthly to the weekly to the daily, then stop at the 4-hour time frame, and that's where I do all of my trade execution. My entries and my exits and my trade management is all done in the 4-hour time frame. There's still a lot more reports that I want to get into and show you guys my average winner, my average hold time, my average hold time on winners versus losers, and then I want to do a quick recap of the year so far and show you guys overall based on the year, what is my average hold time on my winners, on my losers? What does my average month look like? How much do I make in a month? There are a ton more stats that we can go over in the report section, but before we get into that, let's go over the last trade that I had of the month. Now, this trade I did not hold for very long. This one I actually decided to close not based on my playbook or my system, but purely because I did not have the mental capacity to continue to hold this trade. I felt my psychology getting thrown off a little bit, so I went ahead and put my essentially coping strategies into place and closed the trade and got off the charts. Just in case I could just feel that my psychology was not in the right place and I didn't want to make a dumb trading decision while in this trade as I could feel that getting thrown off. So I'll go over kind of what this looks like and the coping strategies that I have in place in case you're presented with something similar. If you're feeling yourself experiencing emotions like greed or anxiety or FOMO, any of these emotions, and there's many others that you may feel while in a trade during trade management, the biggest is going to be the panic and the fear when you start to see a red bar or price go against you, or when you see that you're up a dollar amount and you're terrified to have to give that back. So when you start to experience emotions like this, what I have found works best for me is to cut myself off just completely and entirely. Close that trade. It almost feels like a punishment, but it's worked for me. And anytime I find myself wanting to make up a loss or revenge trade or overtrade or greed and I want to continue the streak that I'm on, I cut myself off. I close the charts and I go do something else. So this was a question that I got asked on Twitter, and I was explaining to everyone that I was getting ready to record my full month March breakdown and what are some things that you guys would like to see implemented in this deep dive video. And one was, what is my psychology like during trade management? And how do I handle when emotions get hot or get high? And that's exactly what I do. It's simple, it's effective, it's cut and dry, and it is me essentially just cutting myself off, closing that trade, closing the charts, taking a step away, taking a step back. It's worked for me and it is highly effective. So since I wasn't able to let this trade play out for its entirety, you can see my realized R multiple was only 1.2. So it looks as though I was willing to risk 4,000 to make 5,000, but this was a scenario where I cut myself off and closed the trade early. Now, fortunately, it was one that wouldn't have worked out anyways, so I would have taken that $4,000 loss, but I was looking for price to continue to move along this upward trend line, and there was a moment where I could have been up almost $10,000 instead of this 5. And it did truly get to an area of support and resistance. It very well could have been a nice winning $10,000 trade, but as soon as I felt those emotions come up, the trade was over. Trade was done. So cut myself off. So I went over why I closed the trade, but let's go over the entry here. This is a very different entry that I haven't taken in years. This right here was a bounce. I got in, not based on the break back here on Sunday, March 25th, but I got in when the price of crude oil bounced along this safety line. So I anticipated that it was going to respect this upward green trend line and continue to bounce off of it. And that's exactly what it did. We entered our position on the 17th at 1800 hours at 67.36 when the price bounced off of this trend line. I was anticipating that it was going to continue to respect. So this is a playbook that I haven't used or made a playbook for in a very long time. When I first started trading, this was a type of entry that I took multiple times, many times. I would anticipate that the price would respect these trend lines and would bounce off of them and would essentially take an entry purely because the price created another touch point on a trend line. And I was hoping or anticipating that it would continue to respect, bounce off, and move in my favor in either direction, either an upward trend line or downward trend line. So let's do a deep dive really quick on how to create a playbook and how beneficial it is and how you can collect data and stats to see, okay, if I want to start incorporating this bounce strategy or this bounce playbook more, I need to get as much information about it as possible to see, okay, out of all the trades that I've taken for a trendline break versus a trendline bounce, which one is more profitable? And if I need to just remove the bounce altogether because it's not working for me and continue to double down on my trendline break, this is where a playbook comes into play because you can see the data and the stats for each one of these setups and then just start to narrow it down. Because I think the best part about a trading strategy is when you're starting out, you've got to figure out what works for you. And even when it comes to trend lines, there are so many different ways to trade trend lines. There's trend line channels, trend line breaks, bounces, retests. There's so many different ways to trade trend lines, but you've got to figure out which one of these setups work best for you. And the best way to do that is to start adding different playbooks and then to start gathering data and information on each of these playbooks or each of these entry criterias or setups essentially and see which one is working best for you. Do you capitalize more on the trendline bounce or do you capitalize more on the trend line break? And it could be very different with each trader. It could be different with each instrument that you're trading, each time frame that you're trading. Price could be more respectful for trend lines in platinum, for bounces versus crude oil. So you've really just got to experiment. This is where the playbooks and TradeZella specifically comes in handy incredibly when you are trying to narrow down a strategy or learn a strategy or see what's working and what's not. All right, let's go ahead and add a playbook. So to add a playbook in TradeZella, you're going to go over here to the left. This is going to be called the trend line bounce. And we're going to add a description here, which is anticipating that the price will respect and bounce off the trend line. We're going to hit next here. And now we've got to add entry criteria, exit criteria, and market conditions. So entry criteria. First thing we have to put is has or is price bouncing. So this is essentially where the price has gotten to the trend line. Now it may not have broken through it. It may not have bounced off of it yet, but price is at the trend line. So the first entry criteria is that the price is at the trend line. Hasn't broken through it yet, hasn't bounced off of it yet, but the price is at the trend line. So that is us anticipating that the price will respect and bounce off of the trend line. But now the trend line at hand, how much information is behind the trend line? So I'm going to continue to use the same entry criteria that I have for the trend line breaks and just make one small adjustment, which is anticipating that the price is going to bounce instead of break. So we're going to put, does the trend line have a week's worth of data? Now, what do I mean when I say a week's worth of data? That is from point A to where the price is at now. Has there been over a week's worth of time that has gone by where it has respected that line? And now the last one, is this a low risk setup? Now this means if price has not bounced off or moved too far away from the trend line. If you were entering and the price has already bounced off, you have to now allow the price to come back down against you and through the trend line even before you consider closing that trade. So depending on how far away the price is from that line is going to depend on if this is a low risk or a high risk setup. If the price is very close to or at the trend line, this is a low risk setup, the lowest possible risk setup. If the price has already bounced off of the trend line, we may be looking at a higher risk setup. So that is all that we need for our entry criteria on this specific playbook. You are more than welcome to add more entry criteria. There are even preloaded playbooks that TradeZella has put in their template that you can implement based on other strategies. But this is one that I like to implement with my trend lines. I like to keep it concise, as constant as possible, and make just minor adjustments so that I know if I'm looking at a bunch of information as a whole, I want to see what works with just very small adjustments. So not too many variables. So the only variable that I changed here in this playbook was, is the price at the trend line instead of has price broken the trend line. Now what's cool is once I start to get more information about the trend line bounce, I can start incorporating things like, does this trend line bounce have 3 touch points? Does this trend line bounce have 2 touch points when I enter? So you can really narrow it down to see which trend line bounces are more profitable for you. Is it the ones that have 2, 3, 4 touch points when the price gets to the trend line? But we'll start very simple with just purely, do we have a trend line? Is the price at the trend line, anticipating that's going to bounce? And does the trend line have at least a week's worth of data? So we're just going to keep it simple. But now let's go over the exit criteria. One of 2 things can happen for me to want to exit my trade. The first one is, has support and resistance been hit, or safety line crossed? And the safety line is going to be the very same trend line that you entered on. So as long as price continues to bounce off of the trend line that you entered, you will be making money. Price will be moving in your favor. As soon as price breaks the trend line that you anticipated it was going to bounce off of, that is your safety line. That is when you close your trade. Now the last thing is I'm going to add market conditions. I just want to make sure before I enter my trade that price isn't moving sideways, that we're not in consolidation. So I want to make sure that I can check off, okay, we are in trending markets right now while I'm entering. The price is trending, it has been trending, and is continuing to trend when I enter this trade. So I'm going to put market conditions, trending. And there we go. We have just created a trend line bounce playbook here. Now we don't have any information on it yet, but when I go back to this trade, we can incorporate this trend line bounce playbook. So we're going to go back to our dashboard. We're going to go back to this $5,000 trade here, and then we're going to go to the playbook and add our trendline bounce playbook. Now let's go ahead and see if all of our criteria was met. Now remember, I decided to close this trade purely based on being aware of my psychological state and cut myself off. So there will be some things that won't be met on this playbook, such as my exit criteria. But let's start from the beginning. So first entry criteria, is the price at the trend line? So we entered right here on this 4-hour candle. Yes. We can check this first box. The price is at the trend line. Now the next entry criteria, does this trend line have a week's worth of data? We're looking from the point A, the very first touch point of the trend line, to where the price is at now. Point A is here on March 10th, all the way to where the price is at now. The following Monday, March 17th. So yes, we do have exactly a week's worth of data on this trend line. We can go ahead and select that next box. Now, is this a low risk setup? That means, is the price close to the trend line? When I entered, the price had already actually bounced off of it. So this was a higher risk setup. Now, in conjunction to my capital, very low risk for me. So I can still check this box off. I only needed to risk $4,000 if the price was going to break this upward trend line. So that was still a low risk setup for me in my capital size and my position size. But if you took a higher risk trade, you went in heavier in position size, or the price was farther away from the trend line, you would not check this box off because it would be a higher risk setup. But since I was only trading with 10 contracts and the price was still fairly close to the trend line, I can go ahead and check off the low risk setup here. Now, exit criteria. I cannot check this box off because I closed purely based on psychology, putting some coping strategies in place and cutting myself off. So I will not be able to check that box. But what I can say is that we were in trending markets. We were currently trending up along this new upward trend line. So I was able to follow 4 of these 5 rules for the trendline bounce playbook. Now we can go back to our playbook area here. As I continue to take more trendline bounce setups or playbooks, I will get to see more data and see, is it working, is it not, what is my average winner and loser. So this is the coolest part about creating different playbooks. You can see what's working and what's not and narrow it down. I've already done so. I've already done, out of my 10 years of trading, and especially the few years that I've used TradeZella, narrowed down what playbooks work best for me. And the 3 touchpoint trendline break has been my bread and butter. It is where I'm seeing the best stats, the most amount of profits, the smaller losses, a higher expectancy, everything all around. The 3 touchpoint trendline break is my best playbook, and that's what I double down on. That's what I take the most setups of. So now that we've gone over all the different playbooks that I used for all 3 of these trades, let's look at the reports here. Mega nitty gritty of my trading. So let's look at it first for the month of March, and then we'll go over this year so far. So now, since this is only 1 month, you can see it shows the best month, the lowest month, and your average month. All these numbers are the same because it's just using the month of March for this information or for this data. But now let's look at the total profit and loss here. The average daily volume is 8.33. My average losing trade is 7,954. And then my average winner is 19,987. My average hold time is only 1 day and 7 hours on all of my trades here. So that's on average. So I didn't hold my trades for very long this month. If we go to the yearly stats, you'll see there's a little bit more of a difference. There's a little bit more of a hold time. And the coolest part is I can even, through TradeZella, I can compare my last year reports to this year reports and see, what did I do last year? What was my hold time like? My winners, my losers, my averages based on last year and this year, and see what changes were happening, and to continue to narrow down what's working and take out what's not. Now, the most exciting part is to be able to see Q1 reports. If you own a business or are an entrepreneur, looking at your Q1 stats is either terrifying or very exciting. For my trading stats, Q1 was amazing. So let's go ahead and look at my entire reports for Q1, see what my best month was, my lowest month, my average month, look at my average hold time, the whole 9 yards. So here we go. We're going to go back to the filter here. We're going to go to the year to date. All right, so based on this year, January 1st to today, Q1, my best month was in January, and it was 77,644. My lowest month was only 13,084. So I haven't had a losing month yet. And on average, I'm making about $40,916 per month in my trading this year so far with Q1. Now, what else can we look at? What does my average winning trade look like? My average winner is around almost $30,000. What is my average losing trade looking like? My average loser is around $12,000. Now let's look at my average hold time. I'm a swing trader, so I'm holding for days, sometimes a week, sometimes multiple weeks, but on average so far this year for 2025, my average hold time is only 3 days and 12 hours. And then this is the coolest part, and this is my favorite part to look at, is my daily net cumulative P&L. This is the true ebb and flow of what it looks like to build capital and to grow your account size. There is ebb and flow. There is profit, then loss, then profit, then loss, then profit. But you can see that it is still this slow and steady up, just higher and higher and higher, but with the natural dips in between here, the natural losses that you're going to accrue in the markets. You're going to accrue or incur losses. I'm not sure which one of the two. But this is my favorite part to see. This is what it looks like to be a profitable trader. There is ebb and flow. So I hope this was incredibly informative for you guys. I wanted to give you as much information and break it down as much as possible what it truly looks like to be a realistic trader in the markets here. And if you guys have any other questions or want me to incorporate any other stats or any other information on my next month breakdown, drop it in the comments below. If you're ready to take your trading to the next level, I highly encourage you to join my community. You'll get to learn my strategy step by step, have an entire community of traders available to you, and even be able to chat with me and ask questions in my Discord. We've got daily live streams, I've got daily trade ideas that are posted with screenshots, full breakdowns, and even a cool feature where you get alerts to all of my trend lines. Now don't confuse it with signals because I do not do signals, but it's a really cool feature where I have the alerts to my trend lines that I have on my charts that get pushed to my Discord community where everyone gets to know when my trend line gets crossed. So if you're interested in joining the community, hit the link in the description below, and I'll see you guys in the Discord. Thanks, guys.